Celsius investors, the stock is going to hit $100 per share, and I'm not the only one that thinks so. The CEO and the president are loading up on shares, and I'm going to tell you exactly what that means for the stock price. I'm also going to go over their financials, future growth, and just plain math. The numbers don't lie, and so I'm going to go over exactly why I think it's going to hit $100 per share. Let's get into it. All right, so without further ado, let's get into how the stock will get to $100 per share. I'm going to go over the financials, the transitions now complete with Alani Nu, future growth, and the top execs buying the stock. I'm going to go over why they're doing it and what it means for the stock price. If you can, please give a like and subscribe. It really helps my channel. It helps me with everything, right? So the amazing financials. Let's go over this first. If you look at their financials, this is their income statement. They grew the revenue by 138%. The cost of revenue went up 159%, but this is kind of foreseen, and that's the only reason why they didn't get an A+. The SG&A went up 95%, but the income from operations went up 167%. The net income went up 148%. The net income to stockholders went up 147%, and the EPS went up 120%. So these are great numbers that they just released. The stock didn't go anywhere though. That's kind of crazy. They 21% of the energy drink market share, right? So out of 100, if you were to just gather randomly 100 cans of energy drinks, you're probably going to get 21 Celsius, Alani, or Rockstar, right? 99.5 weighted retail distribution. This is essentially for every 100 cans that go in, 99.5 are being sold. That's amazing. If they can hold on to this at 99 or more, 99% or more, that's going to just, that'll help so much. And then they are the number 3 energy portfolio in the US behind Red Bull and Monster. So they are dominant players, right? Let's look back at how the company used to be in 2021. The stock price and today, right, roughly the same. We're talking, 20s to, $30. The market cap, roughly the same. Obviously, it's gone up a little bit, but the revenue, 188 million to 2.97 billion. Your net income was, back then was almost 4 million. Now it's 173 million. Diluted EPS is 2 cents, and this is just 23 cents. Right? It was trading at 420 PE back then. Now it's only at a 20. I mean, this looks like a steal deal right now, right? This is looking like, okay, this is what I want to invest in. Not this, but this. So that's why the stock really hasn't gone anywhere, because this PE, everyone was pricing this in for the growth, which it's growing into it, but it grew into the stock price. But now it's growing again, right? So let's go over the transition fees. There's no more, right? And it's probably bigger than you might have thought. The Alani Nu integration is completed, right? The 50 million of synergies captured, PepsiCo DSD transition substantially completed, Rockstar integration on track for completion in the first half of 2026. That's great news, and I'm going to show you why. Distributor termination. That was working against their EPS real hard. They only had 1 cent charge, so they made 33 cents of EPS. You have these other little, costs. And so, this is actually what they actually had. What was 41 cents, but that was the adjusted. And this is after they have all these fees, right? Look at what they did last year. Last year they had 87 cents of EPS going to distributor termination fees. Just in the fourth quarter, they had 21 cents. That's insane. When this last one, they only had 1 cent, right? Their EPS is going to go up a lot because they're not having those fees. And as you can see, when they were going through the transition of Pepsi, the revenue was going down. The revenue went down 30%, down 4%, down 10%. It was horrible. And now we're back to the growth. Now again, with Alani Nu, that just boosted every year over year. Now it's going to be different. The 100%, it's not going to happen. It's going to go back to like 20s, 30s, 40s, 50s, right? That range, somewhere around there. But nonetheless, we're not going to have these negative marks in their revenue, right? The future growth is bright. It is very bright. If you know anything, Alani Nu is really boosting a lot of their growth. Well, they're getting space gains. In the store, they're going to be getting more space for their drinks. Celsius is getting 17% more space. Alani Nu is getting 100% more space on the shelves. Alani Nu grew 100% in revenue, and now they're getting 100% more shelf space. Now, whether they actually sell that shelf space is going to be another thing, but you have to just assume the growth is going to be substantial for Alani Nu, right? If it already was growing at 100% in revenue and then you up the shelf space, that's great. When you look at Celsius compared to just general beverage companies, right? They are sixth. They are sixth in beverage. You have Coca-Cola, PepsiCo, which is who they're partnered with, KDP, Monster, Red Bull, and Celsius. Shows you, right? Now, the contribution to this growth, they had 14%. The only other person was Coke. The only other person was Coke to help, who was the biggest driver of growth in this industry. And Celsius was number 2. As you can see, in the retail sales change year over year, they blew everyone out of the water. No one else, I mean, obviously Coke still did better, did better than everyone else by a long shot. But Celsius was number 1. So Celsius is a top dog. They are not just an energy company, they are a top 10 beverage company who is partnered with the number 2 beverage company. I mean, that's how much better can you get? Now, this is the analysts, what they think is going to happen. Now, if you look the next 2 years, good growth estimates, right? And then they really have them dropping a lot. Now, I don't know, obviously the number of analysts goes down, so I don't know who these people are, who they think. I do not think that it's going to drop that low at all. But this is what the analysts say. I think they're going to continue to be able to grow in the 30 to 40% range. But I guess that's to be seen, right? They're going to be growing international. This is one of the reasons why I do think they will be able to grow, is because international with Coke and Pepsi, they're pretty international. So with Pepsi, them being their energy drink captain, I think are going to be able to capitalize on the international market and grow not just substantially in the US, but just all around the world. So now let's talk about the top executives that are buying the stock. We got this guy, the CEO, John Fieldly. I was going to call him Chief Fieldly. He purchased 8,475 shares at the share price of $29.36. The total purchase was almost $250,000, about $250,000. That's good. I'm going to explain why. Eric Hansen, he's the president and chief operating officer. He purchased 7,500 shares at $29, basically for around $218,000. So I'm going to explain exactly why this is a big deal. These were not automated pre-scheduled trades. They were discretionary open market purchases. There's a big difference. Insiders may sell stock for dozens of personal reasons, from taxes, diversification, whatever. But they generally buy on the open market for only one reason. They believe the current market price underrepresents the true intrinsic value of the business. Now, who's going to know how valuable this business really is and probably will be in the next 2, 5, 7 years? Probably these guys. Now, they were selling the stock back, months ago, and now they're buying it. That should tell you something, right? So how does Celsius exactly get $200 per share? Let's go over it. First of all, it was $100 per share. It was right. This is the line, that line right here. Look at that, $100 per share. So close. Oh my God. Oh. Didn't get it. It almost got to $100 per share. Now, was it worth $100 per share at that time? Absolutely not. It was not worth $100 per share. You have to understand, a stock is worth how much someone is willing to pay for. And eventually it becomes too high of a price for people to pay for, and then no one wants to pay that price. And then, well, you get one of these things going, right? You don't want that. Well, it's now been it's a beat down stock for years, literally years, 0% since October 2021. So how do we get it to go from 33 back to 100? That's tripling up, right? Triple up. So let's look at just a lower case, right? The conservative. They grow revenue at 20% per year. They grow their net income growth at just 20% a year. Right, the PE is going to be between 15 and 30. And you look at, the share price, it hits $100 by 2030 or $50, which is not a great compounded annual growth rate. Now I'm going to go over exactly the CAGR, compounded annual growth rate, and how big of a deal. Even though you're looking at this 44, 36, 32, and you're like, oh, $100 by 2030? Have to wait till 2030? That's going to be 3.5 years. That's too long. I can't do that. I'm going to explain to you exactly, even if it hits $100 in 2030, why 32% of compounded annual growth rate is still amazing. But let's go over another set of numbers, right? This is 20%. Let's say they grow 30%. Let's say they grow just 30%. Their PE will go up a little bit. At least the minimum, 20 to 30, right? Instead of 15 to 30. Well, now the stock price is going to be between 92 and 138 by 2030. Now your compounded annual growth rate is between 29 and 43%, which again, let's go over exactly what that means and how big of a deal that is. If you had $1,000 and you were going to save for 10 years, and your rate was 32% per year, and you just put in $50 per month, how much do you think that $100 is going to be? Over 10 years, $50 a month, that's what? You're talking $600 a year, so you're talking you invest $6,000, you've invested $7,000. How much do you think that's going to be worth? Your annual growth rate, compounded annual growth rate is 32%. Yeah, look at that. That is why just doing some simple math is really important, because you can see with 32%, even if it hits $100 in 2030, they're still getting a great return on your investment, right? The normal rate for an index is between 10 and I would say 8 to 12%, between the Dow Jones, S&P, and the NASDAQ. Celsius can give you 32%, kind of on the low end. I mean, that wasn't the low end, the low end was 11%, right? You're talking, this is really, it's going to grow more than this. I cannot see them growing as little as what this is saying. They're going to grow more. You should see, I did a whole comparison with them and Red Bull, or them and Monster, since they're publicly traded, and they have so much catching up to do, but I mean that in terms of growth. They have so much growth ahead of them. So, yeah, I do think the stock can hit $100 by 2029, 2030, and you're talking a 47, say 30 to 40% compounded annual growth rate with this stock, which is pretty amazing. So, yeah, thank you for watching. I really do appreciate it. Where is it? This one, there we go. I really do appreciate everyone who is still watching. I do believe Celsius is a buy. I have bought a decent, not a decent amount, but I deposit $50 into this account, and I've been buying Hims and Celsius. So I feel pretty good with my position size right now. It's kind of getting heavy with my account and with how much I think this is going to grow. I think it's going to really take over my account. So I'm trying not to put too much more into it. Nonetheless, I think it's still going to grow substantially. And I look forward to it. I look forward to the next few years because it's going to be a fun ride. So yeah, thank you for watching. I really appreciate everyone who likes and subscribes and comments. Go ahead and do that. And yeah, never forget to earn it, save it, invest it, buy low, sell high. I want assets, not liabilities, and you can count on compounded interest.